my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An unusual one yesterday, an indecisive spinning top that was also a key reversal down. It was nevertheless the lowest low since early April. Overall, we continue to slide down just above the middle time, currently at 117.13, of the January to May bearish Andrews pitchfork. Now this pitchfork seems to have taken on the mantle of the bearish angle of attack right now. However, there is an obstacle in the way, and that's the significant 50% Fibonacci line of the June 2020 to January 2021 move at 117.58. Now one other feature I've spotted. The action since mid-June looks to be a possible descending wedge pattern, even if the entry is a bit unorthodox. The market is concentrated between the downtrend, currently 118.36, and the lower trend line that is almost parallel with the middle time, currently at 117.34. These patterns can break in either direction, but they have something like a 70% chance of breaking higher. So bearers, please bear that in mind. I can't give any targets as yet, but I can give an idea of the size of the move when it happens. An upwards break would be about 135 ticks on top of the broken downtrend. A downwards break, well, that would be about 65 ticks off of the broken lower trend line at this time for both. The descending wedge terminates early September, but I imagine we'll have a break before then. One final point. Beware of false breaks here. They are really quite common, so please treat all attempted moves with caution. So far today, an initial move lower but still within yesterday's range. It seems we may well be challenging the 50% Fibonacci line at 117.58 soon. Cable, aka sterling against the US dollar. A third bearish black crow yesterday, as well as being a strong bearish opening black Maribosa. The most significant feature of the day was, however, the move down and close below the rising long moving average, currently 137.08. This action has opened the way to look at the move down since the start of June as a possible bearish measured move lower for potential target X in the 134.25 area. This may also open the way to the idea put forward last month of a possible very large Adam and Eve type double top formed over the whole of this year. Confirmed move below the interesting 61.8% Fibonacci line of the whole of the 2016 action at 136.54, which actually looks like an ad hoc neckline, would help this idea a lot, and maybe start looking at a target level as well below. So far today, a further dip below the lesser Fibonacci line at 136.54, but the market has since pulled back up. Please just have in your mind what I said yesterday. This will be the first challenge to the long moving average since September 2020. Please also note that challenge in September last year was unsuccessful. Euro sterling. A fourth bullish white soldier yesterday with a bullish long white Maribosa that broke up and closed over the top of the May to date based bear channel, currently 84.87 to 85.76. It also did over the descending medium moving average, currently 86.02, and its partner since mid-June, the short medium moving average, currently 85.92. This is all a reaction to the market recently getting closer to the support at 84.69. Now this support had halted the decline back in April and this time has already almost set, with still nearly 2 weeks to go for July to possibly be a monthly key reversal up, possibly. Now we still need prices to move up over 86.5 to set the conditions. We're actually at a high today of 86.45 as I speak. We're really close to doing it. Now so far today, small move higher before coming back into virtually unchanged and then moving back up again. We're still not far from the 86.50 level that needs to be reached to make July a candidate for a monthly key reversal. So watch and see. US dollar against the Indian rupee. Third bullish white soldier yesterday, this time a gapping higher bullish opening white Mariposa, the highest high and high close since mid-April. This continues to be a suitable follow-on to the recent counter-to-counter bullish thrusting pattern. Interestingly, this is the first real move up over the 50% Fibonacci, the April 2020 to February 2021 move at 74.63. However, overhead we have the April 2020 to date downtrend coming into the frame, and that's currently at 75.22. Now further support below is from the 50% Fibonacci line of the February to April 2020 move at 74.26. It is also worth watching the short moving average, currently at 74.51, as it seems to be acting as a dynamic support level last week and now this week. Now, so far today, well, a higher open, but then a fall, all the way below yesterday's low, thus filling the gap, and currently below the 50% Fibonacci line at 74.63, if only just. However, the rising short moving average has so far managed to hold up the action. Still, nevertheless, it looks like an immediate countering bearish engulfing pattern right now. US dollar against the Brazilian real. Bullish open and close along white Mariposa yesterday. The move up ended close right on the descending upper time, currently at 523.86. The newly drawn bearish Andrews pitchfork for the action from late May to early July. Closing around there indeed. It makes me wonder if this pitchfork will last this week actually, with such a move. Meanwhile, below, the rising short moving average, currently at 511.43, is still acting as support. This all goes contrary to the remarkable number of dead crosses we've seen here since late May. It all now depends on whether the bearish Andrews pitchfork will hold. As beyond them, we have the declining medium moving average, currently at 534 3/4, and the long moving average, currently 536 1/4. US dollar against the Mexican peso. A fourth countering bullish white Mariposa yesterday. This continues to show the extensive indecision in the market. This indecision stretches from the fallback to the levels originally seen in mid-April, but which recently started again in late June. The overhead medium moving average, currently 20.1474, and the long moving average, currently 20.1981. 20.1981, let's repeat that. Despite their brief lull in mid-June, still continue to provide the main overhead resistances, though this may soon be challenged. Interestingly, the adherence to the neckline of the February to March head and shoulders top, currently at 1988.13, has brought to my mind the idea that this neckline is acting as an attractor to the market. Meanwhile, the April to May based congestion zone between 1985 to 1995 with the neckline currently at 1961.11 of the late January to mid-May head and shoulders top, well, they may be acting as support. Just for good order's sake, I'll repeat again, I spoke just before my annual leave of the possible monthly key reversal the market might make in June. Indeed, it turned out to be a monthly key reversal down after all that. So far today, yet another seeming counter, this time downwards, though not so large yet. It has potential to become a bearish harami, but it is still early as yet. It all seems to be further evidence of, as I say, of the extensive indecision in this market. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.